365. Shake my hand, everybody. Good afternoon, good evening, good morning. Welcome to another Traders War Room number 86. I mean, I just did the maths. By the time I continue and take a break on the 11th of December, that'll be my last war room of the year. Would have done 90 war rooms together, where we sit here and I map out supply and demand zones, weekly trades, forecast future trades, explain market sentiment, what's going on, and keep breaking down different classes of assets. It's been a brilliant year. Thank you so much for joining me yet again for another war room. You know, my goal this year was to at least do get us to 100 war rooms. So with 90 war rooms in by the 11th of December, I'm most likely going to create 10 war rooms in between midweek war rooms, and they'll all specifically be looking at crypto. They'll be looking at altcoin season. There are rumors that altcoin might be, I'm not yet, a full believer, where I'm going to be letting you know and mapping out zones for you guys in the crypto market, trades that I'm taking, just like I'm going to do today with Forex and indices and stocks, etc. So if you like that kind of stuff and you haven't subscribed yet, please subscribe right now. Hit the notification bell and let's make this money together. All right, so it's been absolutely, an interesting week, wild week with FOMC on Wednesday, with ADP on Wednesday, with a couple of interest rates in between from different countries. We had, for example, the pound on Friday, right, gave us, a 75 basis point rate hike, right? I mean, they had no choice. And then we also had NFP data drop this past Friday as well, right? So it's been actually an incredibly power-packed week in the markets, and markets have done, for the most part, what we expected them to do. I'm incredibly grateful, for the great people in my life who taught me how to trade, all the courses that I went through to actually see markets, to sit down and forecast where markets are going to turn and be 80 to 90% accurate most of the time is incredible. I was literally, anyways, I was just quite reflecting this whole weekend about how my whole life has changed around this stuff. Right, guys, this is the YouTube channel, ours. If you're subscribed, you would know. Right, on the community tab, right, which should have hopefully showed up in your algorithm during the week. And if you want to see more of these posts that I make on the YouTube channel, liking the video, subscribing, commenting, just engage with 365 on YouTube will ensure that these posts show up on your feed. But, at some point in time, about 2 days ago, I wrote, it's going to be an amazing week next week, right? This is the war room for next week, right? Clear, hawkish FOMC. That's a bearish sentiment, okay? No matter what other people tell you, no matter what, the different news articles are going to say between now and Kingdom Come, Powell was extremely hawkish. There were dovish sentiments in between, but overall tone was hawkish. He denied a pivot point. He said, we're going to keep hiking. He said, listen to me, right? There were many clear things, right? There was a clear NFP beat, this past on Friday, but an NFP beat means the economy is still creating a whole lot of jobs, which is actually good news in one sense and bad news in the other, because it means then that tightening hasn't had its full impact yet, right? So it's not a bad thing for a country to be creating more jobs. It just simply means that, Powell to Powell, well, the strong labor could also signify that they still either the lag in which the rates hike has been doing has to still catch up with, or the fact that the rate hikes are not doing much, or slowing down this hot economy. But with this NFP data, I hope you guys picked up that unemployment is now going up a bit, bit by bit. We spoke about this a couple of weeks back, that look, no matter what happens, eventually, we're going to sort of see a shrinkage, right? Remember, we started calling recession earlier on because we knew that the second financial quarter, was also going to be a negative read in terms of GDP, right? So now the main focus for Powell, and he did bring it up again, was, look, man, we're going to keep looking at labor, right? And then rising wages, right? There was a slight hike in wages, right? And remember, the fear there is always around the white price sparrow, right? Few people getting employed, wages going up, prices going up, which continues this inflation curse that Powell is trying to to kind of like do. And then I just wrote here quite simply, this is good for us, it's 365, because we've been bearish all year. So we keep marking out those supplies, we keep entering new sell trades, we keep holding those trades and making money in the bank, right? And it's just simply that, you know, your job as a trader is to understand where price is going, because markets ebb and flow up or down, and go with that particular flow to make your money, right? It's different as an investor. As an investor, it's tough times right now. It's tough times for portfolios, stocks, crypto. You know, I'm also, you know, got my own blood in the water there. And yeah, there's not much we can do until, you know, things shape up. And when by shape up, I'm referring specifically to policy, right? So today I want to talk to you guys about a couple of things, and I put out, you know, the actual NFP results here on the community. But the whole point of this is engage with 365. Let's get us to 1,000 subscribers so you can actually see these things. Yeah, but I'm looking forward to kind of like, you know, dwelling in with the markets with you today. Right now, there isn't much, guys. There honestly isn't much. And this is me from, I'm talking, you know, in terms of what I saw on Friday, just before the market closing bell happened. But I'm going to double check the markets right now for you, right? You will notice that War Room 84 and 85 back to back, we looked at similar assets, right? Because in War Room 84, I was teaching on the danger of Fed pivot points, right? What they actually mean and how they can create a rally up, but then trap a lot of traders and ensure a sell. And for sure, after Powell's meeting on Wednesday, there was $560 billion completely wiped out, from the markets. And that's a lot of people kept buying into the momentum, so buying higher and higher, and then Powell just came and, crushed the markets. And again, a lot of people, a lot of headlines, but even on YouTube, right? Bigger channels, significantly bigger channels kept telling people the market had bottomed. And I don't know how that makes sense. This is a cry for help. If I've ever helped you grow your account, if you've ever made a little bit of money from this channel, this is a cry for help. Please subscribe and like. This is the only way we can get the truth out there, right? $560 billion losses of people buying a clear pivot point, right? It's because they were not taught to see that stuff, right? When you only operate in markets based on your level of understanding. So let's get the channel going, right? But anyways, it was quite clear to me and to us that we're still going to maintain somewhat of a hawkish Fed, and maybe we're looking from Q1, maybe Powell will start to soften. But that's based on a couple of things, by the way, right? From the softening in Q1 is primarily based on the set of reports that are still lagging behind, that we still need to receive. The first of one being which CPI coming out very soon. There's going to be FOMC minutes on the 23rd of November. NFP on the first week of December, CPI for December. Then we get another Fed, meeting, right, the final one for the year. And in December, please remember that we're also going to get a summary of economic projections. So the Fed might actually change their projections. And every time they release one, I break it down for you on this channel. So don't worry about that. But we need to understand their thinking into 2023. All right. Now, before we get far into today's War Room, if you followed War Room 84, right, which happened 2 weeks ago on the 22nd of October, you followed last week's Sunday's War Room 85, then your NASDAQ chart should look like this. Your S&P 500 chart should look like this. Your US 30 chart should look like this. Your Nikkei 225 or J225 chart should look like this. Your China 50 chart should look like this. Your Russell 2000 chart should look like this. Your Bitcoin chart should look like this. Your dollar index DXY swing chart should look like this. These are just some hand-picked examples of the type of swings that we're all in, right? The whole point is I tell you what I'm buying, I tell you what I'm selling. You decide if you want to make this money with me, and we go, right? I mean, in between that, I had a US 30, stop loss hit just last week. I showed it to you guys where I lost about 500 and something US dollars. But overall, we're making this money, right? We're literally following supply and demand trend. We're following the trend. We're following the supply. And if you follow War Room 84, where I teach on Fed pivot points, we are expecting a bigger drop, or personally I am, right? Every time there's a pivot point and it's a fake out pivot point, the stock market falls an average of 13, 20, 25%. It's today's war room, I want to look at natural gas, just as a teaching point, because we spoke about it on the public Telegram group. I want to look at the dollar. I'm going to look at USDJPY, USDCAD, EURUSD, Pound USD, NZDUSD, AUDUSD, AUDNZD, AUDCAD, AUDJPY, EURAUD, EURCAD, Pound JPY, Pound AUD, and gold, right? And really, we're just catching up with some Forex currencies. For me, I think a lot of the work is done between now and up until maybe the end of November. Got clear swings. We need to see those areas tested. We need to see if those supplies will hold, if markets will break us out, break even, first to zero, then drop again. There's a lot of weight in indices, right? So I don't want to do another war room around that. In the currency market, there are a lot of currency trades that we all still should be holding together. But let's just check up on these. I also want to look at currency indexes. It's been a while since we looked at individual currency strengths and weaknesses and draw a supply and demand blueprint for our currency pairs. So we're going to do that together in a War Room 86, right? So buckle up. Let's get going. Apologies for the hair. I was going to tie it. I did tie it. And then the guy who normally comes and crochets my hair showed up to the house. Then I asked myself, why on earth do I want to put myself through so much pain just before a war? You've got dreadlocks and you crochet, you know what I'm talking about. So I paid him, but he's gone, and I didn't get my hair done because I just don't want the pain today, man, right? So let's get cracking, right? So I think maybe let's start off with some housekeeping things. I literally did another recording today on trading psychology, right? So the way things have moved around with people, South Africa, load shedding for different people, it's kind of like work to my advantage because now I can just keep building and building. We are now 50 enrollments in out of the 130 people in the education group that I'm trying to help right now. 50% of this is about 56 people. So please, guys, all 113 of you, check your emails. I've sent them. Make sure you pay $0. Make sure the link that you received is the one that gives $0. This is for people who have already registered in the Pathway 365. Right, you're getting all this bonus value add material. So make sure you kind of like check your emails, right? Once we get to 50%, or if I run out of patience, I need to start uploading those trading psychology stuff, right? I've done a tutorial on how everything looks on your user end, right? But everything will be here for you. All the videos for module 1, module 2 already there. So let's get 7 more. 7 more of you just need to kind of sign up so I know I have a group that I'm specifically growing with on the trading psychology module, right? So I'm looking forward to this. If you want to join us, you want to register, you want to be a part of the winning team, then click the link down below. It will take you to a tab like this. This is for the full course. This is for trading psychology, right? Please, 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 don't waste any time on your trading. Right, folks? Right, there are a couple of things that I want to discuss today before we dive into the assets that I called out for, I called out earlier on. And the reason for that is I believe that, through knowledge a house is built, but through understanding a house is furnished, right? That was King Solomon a very, very long time ago. And so I want to share more understanding on the mechanisms of the markets around a couple of things. I've already kind of like given you guys a basic preview, right, of the impact of, things like NFP, the impact of the Fed meeting on Wednesday, but there are a couple of small detailed things that I want us to start to consider so that nothing in this market catches us with our pants down, right? We have, with us, whether we like it or not, an interesting market, right? We've got very stubborn players in the market. We have, people who are fractionally rational with a lot of money. $560 billion was lost on Wednesday. And most of it, sure, well, we can say was retail traders, sorry about that, but not all of it was retail traders, right? Some of it was smart money, some of it was small banks, hedge funds, institutions who all got wiped out, who were busy trying to force the hand of the Fed, right? Guys, understand this. The more price rallies up right now, the more the stock market, let me be very clear, rallies to the upside before inflation successfully comes down. And just so we're clear, down for Powell is back to 2%. So in about 4 days, we're going to get a new CPI report. In 4 days, that CPI report is going to tell us, we should actually pull it up. We should pull it up at some point. But it's going to tell us, what the new inflation reading is. Now, if the stock market continues to rally before, inflation gets to a very low place, let's say 2%, but let's say they bring it down to 5, 6, 7, something that Powell is comfortable with. The mere fact that the stock market is rallying up before inflation comes down communicates to the Fed, right? This is another way to think about it. It communicates to the Fed that you are not hawkish enough, you are not aggressive enough, you're not tackling inflation enough. Hike again. This time, give them 100 basis points. And this is important to know right now, that we have the scenario at play here in the next few weeks as these reports drop. CPI in 4 days, another NFP in December, another CPI in December. There's going to be a lot of dramas. This is a terrible, terrible year for a clean flow of money, right? Because we've got midterm elections are very soon, like in the next 2 to 3 days. Now, I think it takes about 30 days to a month to actually know the result of midterm elections. I could be wrong, right? Midterm elections basically is the big thing in America where we want to know who's in charge or who's in control of Congress or Senate. I think it's Congress, right? Basically, the Republicans or the Democrats who got more votes in Congress, something along those lines, right? And depending on when those results will drop, historically speaking, the S&P 500 is a good representation of the market. Rallies like crazy after midterm elections, right? So people are starting to assume, just like they assumed about a pivot point, right? They assume there's going to be a big rally that's going to come. Now, I think, and I could be wrong, I'm very interested in buying crazy at the beginning of Q2, the second financial quarter of 2023. And I'll be with you. I'll explain my logic then. I'm looking at the data, but I think by then, most of the work will be done. Or by then, we'll start to have a clear indication of the impact that Powell has done in the market, right? But for those of you who just want a quick holistic overview, I don't want to waste too much time. Number one, this Wednesday was the 6th, right? This was the 6th hike of the year. That's quite significant, right? From 0% from something March all the way to 9 November with 6 rate hikes, right? And historical data for me is absolutely crucial. I love historical data. There was an interesting thing that came out, in the tape. Excuse me. There we go. I just want to place this. My desk is a bit untidy today, right? But perfect time to like the video. Perfect time to go. Ooh, that's a bit right. Now, this week, this came out. I'm going to drop the image somewhere here and post because I don't know where it is right now, and I don't want to waste too much time. But I can tell you, this from the top of my head, right? There was a big data drop that jumped out probably Thursday, Friday this week, and it basically showed U.S. personal savings near historic bottom. So it's a brilliant chart that basically summarizes or attempts to summarize, where the consumer, is, right? And what the chart showed, if I can find it in 2 seconds, then I'll display it. But if I cannot find it right now, then I'm going to edit and, add it in the edits, which is not something I should be telling you. I should just be surprising you with it. But, it's an incredible graph because it actually, for me, I think it's a very, there we go, I found it. It's a very big indication of where we are with the Fed. And let me just make sure I'm sharing this stuff with you guys. Where's the image now? Nothing to show here. You were just here. All right, so I really hope you guys can see it. Can you see it? All right, I can see it. I hope you can see it, right? And look at this. This is crazy. This is wild. Right, now the blue line represents savings. Savings, the money that you're keeping in the bank, you're setting aside. There's so many different rules to this game. Make sure you have 3 months of your monthly income saved, put aside. Make sure you have 6 months of your monthly income saved, put aside for emergencies, blah, blah, blah. I don't really, I did a podcast, 365 Money Heist, also on this channel. and it's going to come back again. I just thought, let me just record a whole bunch of things by myself and then upload more consistently than on a day-to-day thing. But inside our podcast, we spoke about the richest man of Babylon, right? The 10% rule. That's how we say it when we started off, right? But anyways, you can see, right, this doesn't even have to go all the way back. This is literally data from end of 2019 into the pandemic in 2020, right? And so all of a sudden, there was an incredible shoot out of savings, 33.8% of savings during COVID, right? A massive amount of savings. And a lot of that also for me, historically, when you have to do with the fact that the Fed was printing out money. People had more money than they needed, more money than they used to have, because we were doing quantitative easing, right? And then over time, as the Fed started to tighten, remember in Q4 of 2021, which is November, like we are a year in, banks thinking in 3 months, take profit in 1 year. You gotta think about these things, 365 guys, right? We are a year, this November represents 1 year from the time Powell announced tapering. 1 year from the time Powell spoke about the fact that he needed to do something about inflation. 1 year from the time Powell was starting to close the QE, started to taper the market. And you can see here, right, that was the final peak of Q4. I hope, oh man, where did it go now? Right, that was the final, final peak in Q4 of 2021, November, December, right, in that area, where money, people stopped saving, right? This is in the billions of dollars, right? The most, we had about 920 billions of US dollars just saved up, just sitting in banks, collecting, dust. And then, the next big peak was at the end of that tapering. And then since then, there's been a decline in savings from 33% of savings to 3%. 2022 is at an all-low U.S. personal savings near historic bottoms, right? But what's gone up is this, credit card loans, right? So credit card loans now are almost as high as savings were in 2022, whereas the very, very, very few people actually saving. And this is an interesting data point, because it means a couple of things. And I want us to first of all think about what it means from a power perspective. It's going to affect your trading. I'm going to do the war room signals. I'm going to show you what I want to buy and sell. Just giving you the context of how I move, because how I move matters. I only do these things once a week right now because of time. My flow closes in 10 days, so maybe I'll do them more. But in between that week, you have your trading psychology that is out of work. You get scared. You take profit too early. You trade random things that are not in this plan, right? Because the things that are in this plan are taking a week or two. And also, you're going to get bombarded with different information. The reason why I take time to teach before each war room, right, is fundamentally because I don't want you to ever be a part of the 560 billion US dollars loss, or the 9-point-something billion crypto that gets liquidated. Those people who make losses only lose because there was a better trader on the other side of their trade who knew something better. I'm giving you that something better right now, so rock with me, right? Let's keep that retention high together. This is very important. Now, what this means is, this whole credit, right? People are spending. Technically speaking, what credit is, right? You're being given money to spend on loans, on houses, on cars, whatever it is, credit card, personal use, doesn't matter. People are spending and saving very little, all right? We just did a rundown of that graph. And the first thing, that comes to mind is that for Powell, right? Powell is going to have two options. He always has two options. Powell has two options all the time when it comes to monetary policy tightening. Since the beginning of the year, like I said, with that 6 rate hike, he has chosen to go with option 1. Since the beginning of the year, all he has done is raise rate. This is option 1. I think there's going to come a time where Powell is going to have to do option 1 together with option 2, or option 2 only at some point in time. But I think a mixed method is what's going to happen. Option 2 is a little bit more tricky. Option 2 reeks and smells of 2008. But option 2 is to tighten, right, credit requirements. right? Basically, give out less loans. And that's the big mistake, that they made in 2008. They closed the credit facilities when they pretty much, so basically they threw a whole grenade in the housing market, right? Issued out loans to people can't pay for them. But then smart money, specific hedge funds were benefiting from that, sold the bonds and all those sorts of other people who were going to take the L, right? It was a whole big mess, but also they started to tighten credit, giving out loans. And I think at some point in time, if the spending keeps going up and the savings are going down drastically like that, Powell might start to focus his attention on reducing the number of people with access to getting loans, right? So just going to tell the banks to do 1, 2, 3, 4, 5. That's a very interesting approach, but also fundamentally dangerous approach, given we know the 2008 context. Now, Powell did bring this up. Those of you who were paid, acute attention on Wednesday, and he said, look, man, in 2008, there's serious problems with those sub-mortgages, and the finance system today is fundamentally well prepared for that, right? To avoid something like that ever happening again. But tightening credit is dangerous, right? You don't want a liquidity crisis while you are destroying demand, right? Essentially, that's what it is. So I find that very, very interesting, right? But all in all, we will see and hear from the men. We've got one more Fed rate hike in December. So then I started to wonder, like where to now? Like, and for me, I think we need to really be focusing on Q2. That means if you are dollar cost averaging into Bitcoin stocks, into crypto in general, you really want to maximize on the next 5 months. Now, some people feel like Bitcoin has bottomed because it's decoupled. As the stock market started to fall Wednesday, Thursday, Friday, Bitcoin is going up, and people are like, what? Here we go. And then alt started to kind of jump up and down, and I'll talk about altcoins, maybe during the week this week, right? But I'll be very careful about that. I've done tons of videos about that. There are clear supply zone that Bitcoin is rushing to. And we're going to look at Bitcoin today. It's not part of today's war, but I will kind of bring the chart out so that we can all, be very clear. I'll be absolutely careful, about going all in. But I do think for the next 5 months, we need to amp up. Oh, this is not financial advice. You don't have to do anything. In the next 5 months, I will be amping up how much I dollar cost average into my assets. So if you're in my Wealth in 3 Years program, we haven't sent out a new financial note. I didn't skip you or whatever, right? We're still really looking at the crypto gaming section first. Want to see which projects will survive. Those projects are heavily discounted right now, okay? Very soon, now that I know where Powell kind of stands, there will be another financial note coming out for those of you in my Wealth in 3 Years program who want to invest in crypto, right? I'll send that out soon. But for the next 5 months, we really want to maximize on whatever low cost exists. I hope we get more drops. I hope, the market gives another 20 to 30% drop. I really hope that pain is in and that the stock market isn't priced all in, right? But in the event it doesn't, then hopefully most of you have planted seeds, right, in fields that you do not own because the harvest is coming, right? If you know, you know. But in 5 months from now, again, it will take us back to the Q2, second financial quarter of next year, where I do think, markets might be in a better place to start considering somewhat of a bottom, right? Now, Powell, and then Friday, maybe Friday, just to wrap up this quick, summary section. On Friday, the Bank of England came out with the, technically speaking, highest rate hike in the last 33 years, by 75 basis point rate hike. But the reason why I'm bringing this up is, if you go back and watch it, it's very different, right? So 75 basis point rate hike is aggressive. It's not only that, it's aggressive in the context that it's the highest in the last 33 years. But what the governors say was extremely dovish. It was hella confusing, right? So they gave an aggressive rate hike with a very dovish tone, right? And someone sent me a message saying, well, pound at a big rate hike. Why on earth did the pound fall? And rate hikes good for a currency. And I want to repeat, and on this channel, we are supply and demand traders. All right, what that means is your basic fundamental analysis is not enough. Price will definitely be strong, in the event of a rate hike. The currency will be strong. But that's not a good reason to trade, because most of the time, most news events are simply used to drive price into an area of value, or what is commonly referred to as a point of interest. Do you understand? So I give the pound a rate hike, boom. Everybody expects the pound to go up because everybody's reading from the same silly fundamental textbook. What a lot of people are not aware of is the pound is going up into a supply that was there long before, and so price will actually soon drop. So even though the pound got this incredible rate hike, so to speak, why on earth did price fall on H1, H4 so drastically? Was because we went into an area of supply. And we're going to look at the pound in today's war room, and I'm going to show it to you in the charts, because it is absolutely crucial you understand that this relationship between supply and demand is a lifelong thing, right? I mean, I think, for the most part, that is all I wanted to kind of like, I'm just going to quickly check my notes. I wanted to bring to your attention. Historical data is interesting. I'm really looking at, mapping out these different crises, but for the most part, I think we can move on to continue for the day, right? I apologize, this is not up every day. In every way, I am getting better and better as a trader, right? Live it, believe it, say it, affirm yourself. Right, so, the first chart of today is just another education chart. I want us to quickly look at natural gas, and that's only because, I was reminded of the fact that this was actually brought up in the public Telegram group a few weeks ago, and, some of the 365 students offered like very, very, valuable information to someone else who was asking about what on earth is going on with natural gas. Should they hold? I think they were in a buy, etc. So I just want to kind of like quickly review what I said then and where price is now. So this was, 22nd of October. This person asked about natural gas. I referred them to one of our war room clips where we mapped out a buy, took the buy, and the buy was, kind of like a great buy at the time. And, they're in a very, tricky situation, right? This is the chart that I drew up for them when I was explaining, what's going on natural gas, right? And marked out this red zone. You can see at the time, this is where price was, right? This was the 365 buy we gave out in War Room 71, and then after the buy was over, price fell naturally. I haven't been in natural gas since then, right? But like, it's incredible how our signals play out. It's absolutely incredible. Right, so this is the part that I want us to pay attention to, right? So now, if you're in a buy now, you've got two options, because she was in a buy, he or she was in a buy. Right, price in the red rectangle. This is the red rectangle here, right? And I used Hakini actually just to make, the flow of price easy, right? So for someone who is learning, I guess, right? So I'm not sure if the demand is strong enough. That red area, is the demand strong enough to hold? So you have to assess the type of damage that has been done since you spoke about a huge drawdown. Option one, wait to see if the red zone will hold. If the red zone holds, then price might slowly start to climb up, even if it's just for a retracement, which then will allow for maybe a break-even trade. Granted, I'm not so sure where you entered. And then there's a high risk. It's a high-risk option because, like I said, I wasn't sure how sufficient that demand was. The only reason why I did recommend a trade there was simply because of our rules. Areas of values, specific areas of values, I can allow for a fresh touch only or two touches. Just depends on the order block and what type of a supply and demand it is. Is it a supply and demand that is starting to trend? Is it a PCP, a potential continuation demand, right? And all this stuff that I'm saying is in the course, right? Option two is basically cut your losses, right? So this is where price is today on natural gas. Bearing in mind, I've just shown you guys, that red zone. And it's just nice to once in a while kind of like, reflect on our trading strategy, see that it works all the time or most of the time to build that confidence in how operational, in our operating trades, right? So this is Bitcoin. So let's quickly look for natural gas. And I'm just pleasantly surprised, because when you give people advice, and it's the before it even happens type of advice, sometimes you carry that guilt, right? So here's natural gas, there's that red zone. If you really think, if you want it to be exactly the way it was in the picture, as we change my candlesticks to match, right? This is where we were talking. I said it's red zone, just take a small buy and then see if you can hold price back to retracement, because she was already holding a massive drawdown. If I remember correctly, she bought quite high, right? She just didn't know, he or she, sorry, I'm not entirely sure. Right, so this is where we are here. So price hit the red zone, right? And this is what I'm trying to say. We've got a fresh touch into the demand, right? I hope I'm sharing the right screen. I have a tendency not to share the right screen sometimes, right? Price came into a demand, fresh touch, price coming for a retest. And this might be a golden runner, all right? But it's always, for me, it's high risk, but it was an equal area of value drawn next to the original, right? Number one. Number two, let's say she didn't take this buy, or you didn't take this buy, right? If you go down to H4, you can see that there was a new clear buy that came through here. Please note, this is just for education purposes. I am not in these current buys, right? This is just because I responded to someone and I say, see if the red zone will hold, and then start to use some demands to scale up. Right? So if you're done our course and you just understood simple supply and demand, you have identified this a couple of times, because you would be tracking your own natural gas. Number one, price gap up. Gaps are the biggest type of imbalances that show an introduction to buyers. We want the gap to be filled, and then you want to take the trade. Right? So this has been a beautiful entry to take. For anyone who took it, well done on you. And I think it's well worth kind of like holding, right? You can see there on the daily time frame, right? Markets are, slowly but surely starting to develop a bullish relationship to the upside. So expect another red candle and more upside, room there, right? But for whoever needed help with natural gas, I hope this helps you, right? But it's always nice to watch, supply and demand come together. Okay, right. So the first chart of the day today is the dollar. When I talk dollar, because I feel like dollar is shaping a lot of the market activity, if I'm being honest. Dollar is shaping a lot of market activity. You have to think about it carefully, right? Remember what I said earlier on with the example about the pound, that the interest rate went up, but the pound fell. Why? Right? Dollar had an aggressive Fed on Wednesday. Dollar had positive NFP data for the most part. The economy is creating jobs, yes. Unemployment is a big red flag, but for the most part, the dollar chose to react more to that, right? To the slowing down or the growing unemployment rate. Excuse me. All right. So since then, Friday, we basically had the completion of a bearish engulfing pattern on the dollar. You guys know these notes. I've drawn them with you before. There's an H4 demand here in this white zone. This is kind of like where we bought or wanted to buy. At least I bought here for an intraday trade, which turned out to become in a very short swing. I probably got out somewhere here, because I kept telling you guys this is not a bearish engulfing pattern. But H4, H2, gave out slight heads. So it was a very beautiful clean trade. Yeah, down here. This one here is the zone that I drew with you on Wednesday during the FOMC meeting. Literally when Powell was talking, or when the rate dropped, the dollar dropped all the way down here, and then when Powell started to drop from 830, the dollar then continued going to the upside, right? So we had clear indicators, but then ever since that Fed meeting, the dollar has been falling. The dollar has been falling. Now, if there is time, and I think we can make the time, we can make the time. I think this is important. What I want to do with you on the whiteboard and on the charts, whiteboard charts, we're going to quickly look at all the rate hikes this year. I believe there's time to do this. We're going to, because I've already done this with my senior traders on Friday. And it was beneficial to them. I hope it's beneficial to you. And I'm going to map out. I already have the data here with me. I'm about to map out for you all the 6 Fed rate hikes that have happened so far. All right. And I want to show you the impact of Powell's talk on the day of the markets, and then we're going to see for ourselves what happened after. All right. So as to put into context what's happening right now with the dollar and hence the market, gold is up like crazy up, right? Like, any more points up, I might have to give up on my sell positions, right? It's like what's going on? So that's what I want to do right now. Now, the first rate hike of this year and of any other year was, in a long time anyways, was in March. Right, so the first rate hike was on the 16th of March, and Powell gave us, a 50 basis point, and stock market went up by 2.2%. And by stock market, I'm just going to be referring to the S&P 500 because generally speaking, when people are looking at the health of the markets in general, right, they refer to the S&P 500. Right? So we're going to be in and out of different charts. Let's go to the S&P 500 and have a look. And what we're specifically looking for the 16th of March, so I'm going to use the daily time frame, right, which is where we are. Look at this beautiful. I mean, I showed you a snapshot about a few minutes ago of my real account, right? This is literally what we spoke about in the war rooms, right? So you can see here price fell at about 3,700, right? 365, you know what to do, right? Clean demand, clean 365 number. I'm not in any buy. I'm still holding my sells. I have no problem if price breaks me out, break even, or if I'm forced to quickly take partial profits. I would like this thing to continue falling, right? If I look at the weekly time frame in S&P 500, all in all, if you really look carefully, you've got a bearish engulfing pattern on the left, right, meeting price entering that zone, to the best of its ability, and then dropping, right? So it'll be nice to see a continued drop. That's my wish, my speculative analysis, but we shall see. But anyways, we are not here for that today. Today we are here to actually really kind of like think about the market, holistically, right? So we're looking for the 16th of March, where the first rate hike happened in 2022, the 16th of March. This is January, March, 16th of March. See this here? 16th of March, 16th of March, 16th of March. This big green candle, that's the 16th of March. And you can see for yourselves, as Paul was, giving the markets a nice beating and a nice rate hike, markets really, really went up, right? On the day, about 2-something percent, markets continue to go up about 6%. That's a big rally. Remember, the first few rate hikes in the markets were also an approval of the markets that finally Powell is trying to handle the problem, right? This was before the fear that inflation was out of control. In fact, the tagline at the time during the first rate hike and 2 or 3 rate hikes after that was that inflation was transitory. Granted, transitory, right? And we all wish there was a light-skinned guy with a big scar on his head showing up on YouTube to tell us that inflation was not transitory, that it wasn't just going to go away magically, that inflation was actually quite entrenched, right, and here to stay. And I was that guy for many of you. I kept telling you guys that they're wrong about this, right? And so the first time the Fed, hikes up, you can see that the market likes it. The market likes it. It's like, yeah, Fed, good. We have confidence in you. You seem competent. You are addressing the problem head on. That's what we want to see. Markets hate uncertainty. Markets hate not knowing. If you're in charge of the market, if you're in charge of the flow of cash, never say you don't know. We don't know when this problem is going to end. We don't have the tools to fix that problem. All that drives fear. So Powell came and said inflation is transitory. We have it under control. We've decided now to start raising rates. That's the plan. It will help. It will fix things. Cool. Markets rallied, up. Okay, fine. The next meeting then occurred straight after, and trust me, I'm going to fly through charts. It's not going to be a long video because I'm teaching right now. I'm going to fly through some charts. We've marked up most of those charts anyways, so this is actually more beneficial to you. The second rate hike then after this was on the 4th of May. Again, another 50 basis point, right? Stock market went up by 3%. The second rate hike was on the 4th of May. 4th of May, I'm going to give you the charts again. Still, so watch this though. Watch this. Watch why I think it's absolutely crucial that you kind of like join us here and here on 365 and kind of like understand supply and demand so that you know what to do and I'm not always there. The 4th of May, we're going to find it now, when we're really like working back. Price interestingly rallies into a downward trend line, right? And a technical trend will be like, yeah, trend lines this. No, price rallies into a supply. A sufficient supply that was built in on the 17th of January after a peak supply had been formed. Peak supplies, I teach them in module 2. All right. So those of you who already got access to the course, why I want to quickly really ground you guys in trading psychology is I hope you work on your technical analysis one more time. One more time. You've got all the videos one more time. I dare you to use December, less brine and drinking and more working, right? That's the only way. You master this thing here. But for those of you, I mean, there's no time. I'll find it somewhere. I'll find it. My mind is tingling, and I want to teach now. I want to teach. But price, there's a peak supply that I teach on in module 2. There are different types of supplies and demands. Don't forget that. And our areas of value constitute different values when it comes to filled and unfilled orders. So there's a peak supply in December, right? Rally-based drop, classic supply and demand, right? And then there's a continuation pattern and in addition to the flow. And the S&P 500, gives a rate hike here. Markets bestow confidence on the Fed for finally now addressing the problem of rising inflation. We can all agree that inflation in March was not as bad as inflation right now. The peak only happens in June, July. So maybe inflation here was about 4%, 5%, not 9%, right? So markets are like hip hip hooray. All right. So I was trying to find the videos in the course, but yeah, you'll find them yourselves another time, right? So you're looking at remastering that module 2, my trader's edge. Those of you have access to register students, right? But on the 4th of May, if we can quickly find the 4th of May, Powell then sits the whole country down, right? The whole nation down, and we get another 50 basis point rate hike. 50, not 50. 50 basis point rate hike, right? Here, and this is the 4th of May, this green candle here. And like I say to you, the market went up by 3%. You see this green big candle here? That's the 4th of May, a beautiful Wednesday. Markets were like, oh, cool. Powell is on it again, 3%. Here's the problem with this 3% upward movement. It solidifies a consolidation point in the long trend of supplies being in control. That means for that day when the news is going and Powell is answering these questions and seeming confident on the press conference and saying inflation is transitory and so we're going to take it, we don't have to be aggressive. We're only going to give it 50 basis points because actually we can see this thing coming to a halt. We'll look at CPI. It's the same speech, Markets go up 3% on the day, but look carefully at your structure, because your structure will always tell you more. Because structure is where previous money is left. It doesn't matter what Powell says today, right? There are a couple of hedge funds, a couple of banks, large banks, central banks, institutions, trading floors that all need to profit from this system. And if they've been bearish ever since, they've got many unfilled sell orders. Those sell orders are going to collapse the markets anyways. They're going to collapse the market anyways. Now check this out. So what happens is when Powell talks into a supply, breaking off, and this consolidation area actually is a beautiful Talitha area. And if you don't know what I'm talking about, join us. Talitha areas are, just it's a PCP, potential continuation pattern. Let me just call it that, right? But you can see since then, in May, you cannot find on this chart a single supply that failed you. You can't. This is how I trade. We'll talk about it in trading psychology, all right? But I don't want to spill into that right now. But I need something. I need a reference point, all right, in life, in most of the things, right? I might not have been in a cell there. I might not have been in a cell there because all these supplies, the original supplies, were happening without me, right? So maybe I wasn't paying attention. But not a single supply so far from December all the way into May, not a single supply has failed. Not a single supply supply has led to a stop loss hit. Not a single supply, if you're taking them, has led to you losing money. Why? Myself included. I don't think I have any trades still open from May. I've got trades open from July and August. But all of us could be so much richer if we're holding our sells in May. All of us, including myself. I've got swings though from June, July, August. I'm still holding those swings in indices. I hope you are too. If you're not, that's the stuff we need to examine. Why do I watch these videos every week? Get into these zones every week, but then pull out quickly. What is it about me that's pulling out quickly? All right, it's your attachment to money. That's the truth. It's complete fear, and other small things that we can iron out. But you can see in May, markets rally into a supply. The very next day after Powell is done talking, markets fall. I can guarantee you that as this is happening, the dollar is going up, right? It's just that if I add the dollar into today's historical analysis, the video will just be, 3 times longer. But so far, so good. Let's move on. The third rate hike then is now scheduled, right, for the 15th of June. Of course, the same drama has happened. On the 15th of June, we waited for NFP, CPI, this and that, and we've seen inflation move from 3%, 4%, 5%, 6%, right? And now there's a third rate hike where the markets are like, damn, this is interesting. And it's in the third rate hike where for the very first time, right, Powell gives us a 75 basis point rate hike. So this is the first time since the beginning of the rate hikes, Powell becomes aggressive and he starts to also, piggyback on the markets to avoid being, called a fool for assuming inflation is transitory. He starts to talk about, well, we're probably going to get a peak in August. We're going to get a peak in August. So we're going to look at the CPI data of September. He says that in June. Roll the tape. I got it all on the same channel. Just go back and roll the tape. You see these dates? I did a live stream on every single FOMC meeting. So it's all there. You just need to find those dates and find those videos. He literally says, don't worry, it's going to slow down. All right, cool. All right, cool, pal. Fine. So on the 15th of June, he's more aggressive. The stock market is like, we don't like this, but it is short-term pain for you to control the monster. The market goes up by 1.5%. So just so we're clear, the first time he raised hikes, we got a 2% up that day, and then markets go up a further 6% for a couple of days, and then fall. The second time he gives a rate hike, markets go up 3% in one day, and then fall 4 weeks. The third time, on the 15th of June, there's this talk, right? There's this talk of aggressive nature, taming the beast, 75 basis rate hike. Let's go ahead and have a look at the chart on the 15th of June. This is important. When we tell you to backtest, we mean backtest everything. Everything. Why? Because the more you backtest and the more you realize that markets are doing the same thing, you will then change your language. It's not markets doing the same thing. It's human beings. Human beings are behaving the same way. That is market psychology. When I start to teach you trading psychology, you're going to learn. It's very important to know everything about yourself, your trading psychology, how to navigate up with fear, greed, disposition, attachment to money, all those beautiful things. We're going to talk about it. But I'll be amiss to not teach you about market psychology. What are other human beings thinking? Number one. Number two, I'm going to teach you to understand how to predict what the herd is going to be doing. When you understand what the group is going to do and you do the other thing, you will always be on the other side of the imbalance. So everyone is rushing to do a pivot point and then get stuck and lose 560 billion. You are waiting for them to come to you. Right? Market psychology is slightly different from individual trading psychology because you must study the other. You must understand market participants. I've tried as much as I can in my course, Module 1, Module 2, and also on this channel to help teach you to identify the retail trader. You remember in my Module 2, I always tell you, think about a buy setup with these characteristics. If you go to Module 2, the first lecture or two, I can't remember where, it's been a while in Module 2. Right, so let's look at the typical value-based demand, right? The very first type of buy order I teach in the series here in my module 2, lecture 1 of module 2, which is technically lecture 2 in the whole thing. I teach you how to identify the retail trader. You must see a dumb trader in front of you before you execute. That means part of your criteria is market psychology reading. I'm not buying anything until there's someone dumb enough to sell it. I'm not selling anything until there's someone dumb enough to buy it. That's one way to think about it. Now, we are looking at 15th June to see if we can still see the same effect, right? So, January, March, April, May, look at this market bottom, right? So, by the way, when the Fed comes in the second rate hike, right, because we're dealing with pivot points, right? Remember, I told you pivot points, look at this. This is the bottom, 15. And if you come to the YouTube channel, this is incredible. This is good. This is good stuff. This is literally, you gotta prove yourself, man. I don't know if I'll find it, but on Valentine's Day this year, which is what, 14 February, I don't know. Whenever that was, it's a long time ago. Okay, clearly I make a lot of videos, I talk a lot. But on the 14th of February, Valentine's Day, I'm just trying to see if I can find the thumbnail. I've forgotten what it was for. But there is a thumbnail video on the 14th of February, Valentine's Day, where I tell you that the market is going to bottom on the 14th or the 15th of March. I literally say it like that, right? Somewhere in this mess here. Okay, you'll find the videos in no time. Right, and literally, here's the bottom, 14, 15, Fed speaks bottom. The next Fed rate hike was May the 4th here. Markets continue to fall. Markets fall for a very long time. The next one then is June the 15th, right here, bottom. You see there, June 16, 15, see the yellow circle? That's June the 15th. Right, that's the next rate hike. And that's the one that I told you when Powell is the first time seen as extremely aggressive by giving us a 75 basis rate hike. Remember, markets hate rate hikes. Stock market falls because the Fed is giving a rate hike. But in the first 3 examples of all the rate hikes I've given you, markets have reacted positively, yes, for sure, then fallen. Look at this, bearish engulfing pattern, right? You would think it's really time to sell, right? Crazy, right? Right at the Fed bottom, pivot point happens, markets start to assume the whole transitory thing, everything is under control. Where does price come to? Comes back into that selling place. Now, hear me well. When Powell on the 4th of May, the second rate hike, which we said was here, went up by 50 basis points, institutions left sell orders there. These sell orders came back, price came back, got more sell orders to get to the bottom. They will tell you on the newspapers, they will tell you a dovish tone from Powell, Fed pivot point coming, market relief rallies are bound, market bottom are bound, data showing a turnaround is coming. Who is talking? I want to go Kanye West on this video and tell you about who runs the markets and owns the market and how they want you to think versus what they are doing. But I will use the words of Wyckoff in 1934. Wyckoff said, think of the market maker or the smart money as one individual, moving united, the composite man, right, with a daring belief. They left sell orders here on the second Fed rate hike. Guys, I'm not wasting your time. If you get this in your medulla oblongata, you will be a millionaire over time. But soon, you have to understand this stuff, man. This is good. This is crazy. They left sell orders. How do we know? 3 bearish engulfing candles in that area, right? It's not a coincidence. So when the market bottoms, where does the market rally to? Oh, back to the suppliers. Look how they cracked the supply, contacted historical trend line, grabbed all the sell orders, but the Fed just increased the rate hike by 75 basis points, right? And look at this, markets fall even lower this time, creating lower lows, right? Incredible, absolutely incredible how this stuff plays. Every day, you know, there's someone new who thinks the markets are this weird thing that you can't read, can't assess. But really, if you're being honest with yourself, markets are an old playbook of human beings who make money one way. Smart money makes one way. Sell high, buy low. Want to crush the markets, good. We're not going to crush the markets down here. We need to crush the markets up there. How do we get people up there? We tree. Pivot point, pivot point, pivot point. Ooh, right, cool. Now the next pivot, the next Fed rate hike comes up, right? The fourth one, and that's on the 27th of July. And by then, you know, markets are now losing faith in the Fed. Can they really get markets? Blah, 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 blah. Can they get this thing in control? I guess it's never gonna be as transitory. The Powell starts to change his tone. It starts to talk about a soft-ish landing, you know, and want to prevent a hard landing. We don't know if we're going to have a soft landing. Oh, but don't worry, recession is not a thing. We're still far away from that. Labor is strong, blah, blah, blah. 27 July, let's find it. Let's find it in the charts. Today, you want to sit in the charts so that you don't just think it's me, right? Because people be like, there are mentors who make money while their students are not making money, or the public. Yeah, well, I'm not in your brain. I'm not. I want to make it plain and clear, but I'm not there during the week when you're doing your own thing. You need to just kind of like be doing this if you decide to, but I'm also not your financial advisor, just so we're clear. Right, so on the 27th, so in the middle of this rally, we get another Fed meeting on the 27th of July, right there. So there's a bullish engulfing pattern right there. This is what it looks like, right? Powell does another 75 basis point rate hike. Come on, man. This is what the markets look like on that day. Look at this. This is literally what the markets look like on that day when Powell gives another 75 basis point rate hike, which we know is bad for the stock market, which we know is meant to crush the stock market. That's the toad. Leroy keeps telling you, sell. Like, as long as it's aggressive, just sell. But the market temporarily goes up. It's entrapment for you guys. Look at this. So 75 basis point here, more aggressive than any other rate hike. And on the 27th of July, the market went up by 2.6% on the day alone, right? But we know that it further went up a couple of more days, day 2, day 3, day 4, day 5, day 6, blah, 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 into a supply eventually, right? Basically, price finally got to a supply. Now, at this point, again, one could argue that the market wanted to see a confident Fed trying to get inflation under control, right? You know, whatever the fundamental reasoning is, the point of the matter is supply and demand were completely in charge, right? Literally in charge. I just want to quickly finish this playthrough of price, right? And then the next one, we're almost done with this stuff, guys, but I think it's important, right? The fifth rate hike is an interesting one because now, you know, the markets kind of like understand where things lie, right? People are losing, you know, face with the Fed. There are rumors of rug pulls. You know, at some point there was votes so that maybe the Fed is going to give us 100 basis point rate hike, and on the 21st there's that what's it called? A gap between Fed meetings. There is the August peak where inflation goes 9.1%, and people are like, okay, fine, it's peaked. And then Powell's like, we're going to skip, we're going to meet in September, no meetings in August. Let's look at NFP and other CPI, because remember, Powell's line is quite simple. I will stop hiking rates aggressively when we start to see back-to-back, month-to-month evidence of CPI falling. Evidence of inflation falling, ISM, PMI. There must be continuous back-to-back evidence of a decline, okay? So on the 21st of September, finally they come back after a long break, and of course, it's now 9.1, 8.4, 8.2. But while there is a peak and inflation is starting to come down, CPI keeps missing, all right? So it's not hitting. Right, there's an expectation of 8.1, it comes in at 8.2. So it's still hotter than expected, right? There's a continuous miss in the market. And so again, he gives us a 75 basis point rate hike, but look what's going on now. The second half of the year, markets are like, screw you, man. Even on the day you speak about all these changes and how you're gonna fix the world, markets drop by 1.7% on the day. Let's quickly go to the charts there. Even if I end the war room here, I've done more for you than you could ever imagine if you walk away with this information. I've done so much more. I've always been big on the power of one. So if just one person understands me, clearly about what I'm trying to say here, that would be great. On the 21st of September, so markets already started dropping eventually. We'll look for the 21st of September. There we go. Right, so let's remove everything except for 21st. So in front of us here is what markets look like on the 20th of September. One day, on the 22nd of September, sorry, one day after rate hike. The rate hike is on the 21st of September, and this last green candle here is the 19th of September. I apologize, 19th of September. So 2 days before Powell shows up, markets do two things: create a supply, a PCP, clean imbalance away, break market structure. It's like, what comes first? You look at structure, communicating. So when I show up and say it's going to be a sell or don't listen to pivot points, whatever, I'm not like a genius sitting with a crystal ball. I'm not the oracle. I look at the charts and I see, where is the flow of money? What is structure doing? What's leaning towards what? Is supplying charge, is demanding charge? If you do it for higher time analysis, even better. But this is where prices on the 19th of September, Powell's going to show up, give or take in the next 2 days to then give a 75 basis point rate hike, which is this red candle here, 21 September on Wednesday, and markets continue to bleed. Wait a minute. So you don't have to have waited long to make money. This is literally free flow. Maybe this one was tricky because price didn't come back, right? It triggered this one though, but maybe I don't know what you missed and what you didn't miss. My point is, if you understand the flow of money, markets fall 21st of September. Then the next rate hike, which is the one that we just had, you see what price did. Price created an imbalance, another breaking off, another breaking off, but created a beautiful imbalance, didn't come back to drain more sell orders. This is how you make money in the markets. If you understand this, then means you are golden, all right? Markets left an imbalance, didn't come quick. This basic module one, ask anyone who's done the course. This is happening in real time. It's happening in real time. Now we come to the final rate hike that's happened so far, which is on the 6th of November, just a few days ago, guys, just a few days ago. Remember, I'm doing war rooms Sunday after Sunday, marking out these zones. So I mark out those two yellow zones, as you can already see on the S&P 500, and we say, come hell or high water, news or no news, pivot point or no pivot point, we have identified a supply that needs to be tagged. It's that simple. You keep the trading simple. Power comes 6, more aggressive, no pivot point, and the stock market is mad. Didn't get what they wanted, drops by 2.5% on the day. But let's go find the 6th of November on the charts. Let's find the 6th of November. This is October. That's still October. This demand here at about 3,700 was created during the Fed pivot point week, that Friday, right? On the 21st of October, that Friday. This demand was created on the 21st of October before the meeting on the 6th of November. Watch this. Yeah, man, listen, check this out. Now we're gonna hit the 6th of November very soon, somewhere in there, right? That's still, goodness gracious, October, price enters into supply. Price moves away from the supply. On the 2nd of November, price comes back into a demand. 2nd of November, knowing very well that Powell, what just happened? Sorry, it's not the 6th of November, it's the 2nd of November. Today is the 6th, right? So on the 6th rate hike happened on the 2nd of November. Right, so on Wednesday, the 2nd of November, look at this. Look at this. Right, and actually, most of us were triggered a day or two before that. But there it is there. Markets went back into the supply. So now it's the supply pushing price down, that 2.7% down, plus more, down, towards the pivot point demand that was created the week before. Supply demand, and that's it. If you can get to a place where you know information, that's fine. But if you don't know how to use the information like I just did right now, all you have to master is supply and demand. That is all. Right. Ladies and gentlemen, I thank you for your patience. I would like to now go autopilot as quickly as possible. We're going to look at DXY, AXY, BXY, EXY, SXY, ZXY, and JXY. Those of you who don't know, those are your currency indexes. I just want to look at relative strength and compare them against currencies. I hope this was clear. I hope this was clear. I really hope this was clear. Those of you who want a private signal crypto group and all that kind of stuff, I heard you. I'm going to make one. It's going to start in January. What we're going to do between now and December is I'm going to back test crypto with you. So it's going to be also put in the course. So that's all going to be for students only. So you're going to see me back test. There are 300 spot crypto markets to trade, 300 streams of income, easy money, baby. I'm going to literally pile on. I'll be doing 10 assets per video. So there'll be 10 assets inside one video. So after 30 videos, I'll be done back testing the entire spot market, at least on FTX, which is very similar to the stuff you find on Binance. And then you guys will be empowered with all that kind of stuff. And then in January, we can then start the service. I've absolutely enjoyed trading crypto this year. More so than I actually enjoy trading currencies. And I'm actually a currency kind of guy, which is quite interesting, right? So I heard you, and all that stuff is coming. But let's just start it next year. Because this year I've already got the teaching going on, and I don't want to overload myself and provide a poor service, if that's okay. Right, so DXY is our first currency that we want to look at. And I just want to quickly just understand relative strength of these currencies, right? I'm going to remove this because it's just going to make the whole thing untidy. Right, dollar to me is still strong. Yeah. It's falling. Yeah. Bearish engulfing pattern. Yeah. Supply update still in chart. Yeah. Glass effect, and one should be worried about this, right? We should be worried about that, for the most part. It's not really a trade I want to take. I have no interest in selling the dollar right now. The only time I will start to look to sell the dollar is if my internal trend lines are broken. Right, and specifically the one in front of us here, this one here. I need that trend line to be broken for me to even start to consider, dollar still has enough room to breathe. Right, I need this trend line here broken. Now I'll be like, ooh, all right, cool. Then maybe I'll want to sell. Right, until then, I'm not selling. I'm still a USD buy the dips kind of guy. Right, remember, in currencies right now, we have a situation where the Fed goes up and other currencies also hike their interest rate. Right? So like look at pound, extremely hawkish right now with a dovish tone, but they've just given a big rate hike, biggest in 33 years. And so because of that, there'll be relative exchanges of what's strong, right? But I think dollar dominance is still quite a big thing, right? But again, those of you in the game, right, just be what, I'm worried about, what this means, what happened on Friday. There might be something in the markets that I didn't catch, something I didn't understand in the sentiment. Please remember, I'm not a robot. I'm only human. I know what I read, and I try and read as much as I can, so I'm, as prepared as I can be for you. But, for now, I'm going to let this play out. Whatever is going on, I'm going to let it play out. I want to see what's up, right? So we've got a fresh demand, daily demand that's no longer fresh. You can see in this green zone, there was one touch to the daily. Second touch was deep, and then markets started to create, this is the only demand that we had that markets had not used until Powell came to talk on Wednesday, and now price is falling. So, again, this is good for me, right? Let's see what happens here, right? There's a high possibility that could happen into there, right? So for now, I'm going to be watching the relationship between the fresh H4 supply above and a retest of this H4 demand below. This H4 demand breaks and price lands here. That'll be interesting to see as well, because you've got a value-based demand. I'll be looking at that stuff. I'm not doing anything on the DXY But you know, when we're having this currency conversation, by the way, it helps a lot if I had time, I haven't done it in a long time. Create a spreadsheet, you write the dollar, you write all these currencies down, and then you write relative trend. So you want, by the time you're done, to have one spreadsheet document in front of you that can actually show you like a currency heat map. I think TradeView currency heat map. I think it used to have a currency heat map somewhere. TradeView currency hit. There we go. So you want to have, I don't use the one that they have, by the way. I really love creating my own stuff because I understand it and I know what factors are included into it, right? Taking someone else's stuff is difficult for me, but there it is. So you want a spreadsheet that shows you something like this, right? That will tell you that, look, man, the dollar is strong. And in your mind, what does that mean? To me, it means hasn't broken any demand, hasn't broken the trend. Yes, currently engaged in supply, but that supply hasn't dominated the dollar. So I'll make that a very strong green compared to the euro, etc. But there's a currency heat map here that also basically kind of like shows you, you know, what is what, you know, in relative strength. You saw what I typed there. I say currency heat map. I hardly ever use it, but it's nice to kind of like refer to it in the morning just before you start placing trades, just to see what's hot. Right, so for me, dollar is kind of like strong. The next currency index is AXY. AXY is the Australian dollar. And I kind of want to see them from, because I haven't seen them in a long time, so I'm going to look at them from a higher time perspective. Right, so clearly a long time ago we mapped that the AXY was going to come down. Clearly it did come down. We mapped that where you think it was going to go up, and now it's arrived, and now it's going up. So we expect to see some type of slight strength into the Australian dollar. Fantastic, right? I think for now we can assume that maybe a demand is in control, but how long will that last, right? This would be interesting for the Australian. So as the dollar falls, right, you know, Australian currency might be able to take advantage of the dollar falling. So for example, as dollar is falling, I expect AUDUSD to be slightly facing, you know, upwards, right? I'm just trying to show you how to make sense of that information. And there you go. You can see just like AXY, very similar, if not the same. AXY on the daily time frame, the currency index alone against the dollar. And AXY, the currency index as is on the daily. See that there on the weekly, 3 strong weeks to the upside. On the daily time frame, with let me know if I'm going too fast in the comment section. It will make the next war room better. I'm just worried I've spent a lot of time teaching that those of you who want signals only are now, you know, worn out, right? With a gap down, gap up, etc., etc. If you can't make sense of this, always use a Kinihashi, better volume-based candlesticks, right? And so markets came in here, clean order block, markets trying to hold up, markets being stalled here, telling the area, if they break this area, it goes back to that zone that I drew on the weekly time frame. Let me just show it to you again on the weekly time frame, and I go back to normal candlesticks. It's almost like we knew. There you go, bearish engulfing pattern, right? And if you come to AUDUSD, and I shouldn't be doing this because I'm going to mess up the order, but you can see very similar story. You can see on the weekly time frame, AUDUSD, 3 strong weeks up. You can see on AUDUSD, there's a very clear bearish engulfing pattern, which would signify some type of supply up there. If I go to the daily time frame of AUDUSD, then you can start to see what we're dealing with. Price is struggling, right? Wants to clear that little area we saw on AXY. And if it does clear it, then we're looking at price, you know, moving a little bit up, right? Currency is much more trickier. There are a lot of supplies along the way. So what would I do? I would choose the one nested within a weekly area of value for better confluence, right? Bearing in mind that this is not a great bearish engulfing pattern, neither is this, right? The other thing I would do is to remember the rules about retracements. So retracement, because overall we think the dollar is strong, want the dollar to go up. So any type of movement of the dollar coming down is a retracement or a reversal, which means if AUDUSD is going up, AUDUSD is retracing from selling, it's not reversing, and selling will soon continue one day. And when do we want to know, or how do we know when selling will continue? We mark the latest market phase. I've got a beautiful video on the channel on retracements. It's good, it's long. Someone was like, I want to join, and they're like, your videos are 2 hours long. What do you want? 15 minutes on how to make 10 billion. That's how you get scammed, right? Like really take the time to learn, guys. Where is it? There we go. Beginners to Pro Guide on retracing. This is a brilliant. This is actually, I took this from a paid lecture, right? So it's and I need to make sure I'm careful about how many times I do that, right? So this is absolutely a great public lecture for you guys to look at retracements here. But anyways, you look for your swing high on the latest market phase, swing low. Oh, you'll see I've already marked it out there. This is where my golden ratio starts. If I go to the daily time frame, then yeah, I'm looking at starting to negotiate price down here for selling. Here is a good place to sell. There is a good place to sell. There is a good place to sell. Even this 50% mark is a good place to sell. How will I know when it's now time to sell? I'm going to have to look at the dollar. If the dollar is now, if there's a match between the dollar arriving at significant strong demand, time for the dollar to go up, then AUD will fall, right? So I took time explaining DXY, AXY, AUD, USD. I won't be able to do that for all of them, but let's just kind of like look at them from a bird's eye view, right? There's the British pound. Go weekly. Go at Kinihashi because the candlesticks look weird, right? Price bottomed while back in September. In fact, we basically took out a major turning point, right? So pound doesn't know where it's going right now, or rather does not know how low it needs to go, okay? Normal candlesticks show us something similar. Drop, 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 price starting to come back up on the daily time frame, right? People are like, right? Why did pound gap to the downside? Interest rates this, interest rates that, doesn't matter. You need to be asking yourself, where was the pound in relation to supply and demand? Markets rallied into a supply, right? Doesn't matter what the rate is. The supply is in charge, it will push price down. That's how that works, right? So, we've got kind of like a pound right now, weekly, daily, moving in the verge of some type of a daily supply, right, which could be a potential sinking point. Of course, with the dollar being slightly weak right now, right, you can see on Friday, the pound then covered that gap with one candle, right? If the dollar was falling, the gap is covered. But overall, I'm a big believer in long-term selling the pound. EXY for the euro. Right, took off, taken out every single thing gone. Right, this will be interesting on the euro if it was to actually gain the strength to go all the way up there on a governing time frame, right? Because then that would make this a new demand that supply could make contact to, right? So right now, euro is trying to move up, right? Change the candlesticks, okay? A whole lot of supplies along the way. And that's only because, the sentiment has allowed it that way, right? Just clean supplies and demands, guys. There's really nothing. There's honestly nothing, crazy here I don't want to act like I'm doing something genius, right? I'm just looking at my currencies. I'm reading them through the lens of supply and demand, and stand, fell, gap, coming back. So EXY, slightly bullish right now, dollar bullish, but how long will this last, right? Supplies marked ahead. Next one, Swiss franc, which is FXY. I see the auto translate is a bit off sometimes. I'm not going to change it. I'm not going to fix it. It's just tracking my voice. It's a feature. It's not so. It's not no one is transcribing this. It's not a human error. I think it's because I'm talking too fast as well. So, but yeah, if you don't like it, tell me and I'll remove it. If you can see it, maybe you can't see it. Right, so this is Swiss franc, and then if you can't see, you don't even know what I'm talking about. Right, Swiss franc will always prey on dollar weakness. In fact, this is one of the few places we actually can come check to see a turnaround in dollar investor sentiment, right? Swiss franc outperforms or does well when the dollar is doing terrible, right? I can't see anything, of significance on this chart to even make a decision, Swiss franc is trying to range or consolidate at the bottom. A couple of new lows were triggered, but apart from that, nothing constructive is happening on this currency. Nothing. But we can see lower lows are being created, and that's obviously because for the most part the dollar is currently strong. New Zealand dollar is the second last asset that we need to look at from a governing perspective. No more candlesticks. There we go. Glass effect, right? This zone is wild. This is crazy. I haven't been in such a long time. Right, so this is not going to last. We've priced this whole red zone. It's not going to last. What we could get and what we should be waiting for is to sell NZD pairs as soon as price gets into that zone. NZD pairs go weak when price gets there because that's a valid supply, right? Look at this, right? Slightly better than parabolic structures, but we want to get to this weekly supply and start to consolidate and then sell. The last one is the Japanese yen, right? One of the most controversial currencies of our time. Just continuing this good behavior of dropping so as to, preserve its nature of business, which is low interest rate economy. And supplies have been created. There's really nothing I can tell you about this thing. Really, it's just the same old. Okay, because that's done, now we're gonna fly through some charts, folks, because I can feel my energy is tanking. But I hope you've enjoyed this, and I hope you've learned something. And if you have, please don't forget to like. You lose nothing, but it's such a great affirmation for me that I am doing something that's worth doing in terms of time. But you also help the algorithm, help lots of people who are seeing terrible things and then just putting their money into it. So as someone who told the world, a very influential person in the game, told people to sell all their XRP tokens, that XRP is useless. I don't know. You see, like I said, I'm just a fly on the wall. I only have 500 subscribers. Like I have 97 Twitter followers. Like my words have no impact now because I'm a nobody. But geez, when I see people with 100,000 subscribers telling people the wrong thing, it's wild. And then people follow those people because after all, if you only have 500 subscribers, you probably don't know what you're talking about. Check the record, man. Right, so USDJPY, this is interesting at the top, right? At the top, we've got a formation of like 3 down weeks now, kind of 3 down weeks anyways. If you think about a red candlestick, it opens at the top and closes at the bottom, right? So the first close was somewhere, the second close is a bit lower, and the third close is getting lower and lower, right? So just be very careful of that. It might mean nothing right now. For example, just a few months back, right, we had a clean 2 big full body drops, consolidation and price rally like crazy. And before the USDJPY with 3 week drops like that, then clean demand was created and price rally like crazy. And before the breakout of an already upward channel, this was the norm. So there's nothing to worry about yet because this is seemingly a pattern. Right? Week 4 is always a fire week, and there's our big target. I'm saying this to say if the dollar gains, dominance and strength again, let us all hope that, or I don't know where you guys would buy, but I really would love to buy down here. I really would love to get triggered down there. If I get triggered down there, the only way I'm getting out of this trade is if my stop loss gets hit or my take profit gets hit, right? It's just, there's a clean monetary policy divergence trade. It's been working for months, The question now is the hidden demands in these long wicks here. That's the only annoying thing about this chart. For example, if there are no H4 demands, that's going to help a lot. So here's the latest H4 demand, and it was taken out, which is beautiful. And if I do something like this, right, you can see this was taken out so that this could land here. And now you could have the unfortunate situation where price then takes this demand as the final and then runs up, or we could wait to be triggered in the screen zone here, right? So, but that's the play. I'm still really a USDJPY by the dips, by the dollar dips type of guy. So that's USDJPY in a nutshell. USDCAD. USDCAD. Don't forget to check out the links in the description. Join us for real valued content. I mean, I don't do a lot of things great, but I do think I am good at breaking down markets and institutional order flow and teaching this stuff. I've lectured at Rose University for about 3 years, industrial economics, and I do enjoy interacting with people. So yeah, I think these are the few things in the world that I do very well. Yeah, and I love this stuff, man. I love this stuff. Right, USD CAD on the governing time frame, falling, dollar falling makes sense for now. Bearish engulfing pattern on the weekly, not looking IOBA, but look at where the equalizing demand is, right? It's still quite far off. So we must be careful about where we enter on the daily. On the daily, there's a demand just above, right? Which is where price is going to hit next. So I would have 2 pending orders. I know I already have one here, but I'm probably going to put a second one there. Right? If this one doesn't work, boo-hoo-hoo, American sad story, right? That's just how it is. Dollar slightly starting to feel the pressure, but for the most part, then the next demand should hold, right? But I definitely don't want to miss out on this one, basically, right? So it's less of FOMO, but more of the fact that this is the next immediate demand. It's a fresh daily demand. There's not much to me that shows me that there's any type of weakness in this demand. And so I'll definitely be risking here and then risking there, right? Because both of them are nested in higher time frames. But if you see this demand is the first one, it's just above. So my only worry is price might break this demand just to get to this area here below, right? But until then, it's just a wait and see, type of situation, all right? So that would be a good place to mark my stop loss, and by that I mean my stop loss would be below this, not above it, just below the high of this wick, right, where there was an equal touch there. I don't want my stop loss at the same place in case markets wants to touch that area again. I'm trying to put it a little bit below for this buy order here, and then obviously a pending order here and a stop loss there. Right, so that's USD CAD smoked. Next, EURUSD, my painful EURUSD. Right, EURUSD, clean supply holding. If you notice, markets on Friday rallied into another interesting area of value. If you go to H4, you'll see why. Right, we've got a lot of interesting consolidation areas in this H4 zone. Very, very clean supplies on H4 that markets might have tried to revisit. And obviously the fact that markets entered this area on the daily here. So for me, outside of what I have no choice but to hold, which is just this entry here, I don't know if this is going to hold. I suspect it might not, right? If all the charts are showing us that the dollar might have to fall for another week or two, then this is very tricky, right? You've got a bullish engulfing pattern, so just be very careful of that. All right, be very careful of it. Overall, I'm bearish on EURUSD, but because I'm so bearish on EURUSD, I hardly ever participate in the buys. All right, so this is purely based on the moment the dollar recovers, this is going to fall, right? And again, don't forget, you've got a lot of crazy things in the markets at play in terms of data reports, really surrounding the dollar, surrounding inflation data, surrounding all sorts of things that could actually strengthen or at least push the dollar down, just fundamentally depending on the type of sequential trader you are, right? So that's EURUSD. The next one is Pound USD. Come on, man. Pound USD. There we go. Right, pound USD. I think we spoke a little bit about it earlier on. I don't want to say this is my markets from last week, right? So you can see for yourselves, we have a breaking up in pattern right there. Okay, markets finally went up. So one would argue that this supply is gone. And like, yeah, for sure, I would agree with you that this is like risking quite a lot. But for me, it's like, well, I told you guys last week Sunday that I definitely going to put a pin in order up here. They did tell you all the tape, war room number 85. And the reason why I just marked that out was because at that time I just didn't know which supply would be used, right? So this is it. More importantly, for this to be worthwhile, if I'm right, I'm going to hold it to at least give me a 1:3. That's the only way this is going to be worthwhile, or worth it. But we have, a percentage of, price most likely kind of like dropping, from there. So we'll see Monday, Tuesday. But again, it's slightly unlikely. It might happen, but it's just until the dollar plays fair. Unless if there's like a demand that the dollar is going to stop it very soon, within a day or two, right? I'm literally talking about a day or two. So going to be that H4 demand or the daily demand, right? That this is value-based, this V-shaped demand there. So if any of those stop the dollar from falling, then yes, absolutely. Pound USD sales could continue there. But for now, I just have the one position open, and I'm gonna hold it until there's clarity. I could go very small lot size here, just before London session, right? So that's another thing to do. Probably what I should do is to see if I can build and compound, and after that we hold and see where price takes us, right? So that's pound USD. And just so it's all written down, for those of you who like to write things down, please don't forget to take a picture of this or a screenshot of this, unless if you felt like you don't need it. I think it's like such dope, important information. Understanding the markets is all we need to do to make money. It's kind of like our job. But here's what I need you to also consider, right? So this is, because I know I've mentioned different dates and all that kind of stuff, but let me just put it together. On the 8th of November, in 2 days' time, I want you to understand what's going on this month. Why there's like, because you might feel like, oh no, it will take 2 weeks for the dollar to get to that demand or to that supply. So what's going to happen is there's going to be sentimental data. Sentiment can do crazy things, right? So instead of an asset moving 1% today, it can move 3 or 4%. And so now those demands and supplies, you thought price is going to take 2 weeks to get to, markets is there in 3 days, right? So you need to understand sentimental drive, right? It's like the difference between a bumpy road and a smooth, road. Like it affects your speed, right? So if there's a lot of sentiment, there to lubricate the landscape of price, supply and demand sometimes moves faster. So the end of November, we have midterm elections, and it's hard. It's hard. I don't even understand, the most of this kind of like election stuff. So I'm not from America, but I do know that the markets care about this, especially care about who on earth is going to be running the house. And even if markets don't care, I know there's going to be a lot of volatility there. So be careful. Then on the 10th of November, after that's done, we're going to get CPI, right, which is very important. On the 15th of November, we've got the G20 meeting, and just watch out for city headlines, watch oil, the basics. And then on 17th of November, we've got the crunch budget plan for the UK. It doesn't really matter. There's soccer, 21 November for the World Cup. I don't even know what type of sentiment that would kick off. But the next date that I want you to bear in mind is 23 November. We have the FOMC minutes. The FOMC minutes are interesting because the FOMC minutes, it's where Powell and the FOMC go back and go, oh, we say this at the press conference, but have you seen the latest NFP that happened after the press conference? Have you seen the latest CPI that happened after the press conference? Because of these reports, I'm making adjustments to the things I say. I say there'll be no Fed pivot point in December. Markets look great. Maybe they will, or absolutely not, right? So, we keep track of those FOMC minutes where they get released, because we want to make sure that the Fed hasn't changed its tone. I will do a summary of the FOMC meetings video for you on the 23rd of November, so that we're all on the same page on this kind of stuff. But yeah, I just wanted you guys to have this like in your face so that you know what's coming, because it's going to be a very big week, big month, so to speak, right? So next one is NZDUSD. NZDUSD. Okay, I say I marked it in white. I wonder why. Marked it in white there. I wonder why. Right. So just be very careful about where price is right now. Let's see. Right, so I'm looking at the governing time frame. Did markets even bother to make contact with the demand? They did not, right? So this is a perfect time to grow a Fibonacci, man. See that there, swing high, swing low. Very perfect time to grow a Fibonacci. That is a perfect time to draw a Fibonacci. So, you know, swing high, swing low. Just get the gist of the land. You can see I've already marked golden ratio supply. I kind of forgotten I already did that, right? So now the question is, will price hold here, 50% and drop, or here, right? That's the question. All right, moving to the government with mayoral time frame. This is where price is right now, and this is that 50% drop, right? Very clean, fresh, bearish engulfing pattern, breaking, you know, structure, and then markets following, right? So we'll be watching this white zone to see if there'll be more continued upside, I think. On the daily time frame, we've got the similar thing. Sorry for the mess. Okay, sorry guys. Yeah, it's been a long war, man. My energy levels are down. Right, so you can see, all right, very clean. I would wait. I would be very careful of this first zone here. I'm happy to definitely risk some money there, depending on where the dollar is, right? NZDUSD. That's a very nice zone to try. It's a supply. Remember, everything's on a scale of probabilities, so it doesn't matter. And then obviously, the higher you go, the more opportunities we shall find, right? So NZDUSD, done. AUDUSD is the next asset. I think I used it in my DXY, AXY example. But in case I was not clear, this is the same as what we just saw on NZDUSD, that gray area where I want to do nothing and wait for these Fibonacci retracement areas. All right, 61.8%, which obviously will be this first supply and the supply high. That's AUDUSD, which again, all these charts once again hinting at slightly a little bit more of a dollar drop before they can start to sell. AUDNZD was still holding. Please hold, please hold, please hold, please hold. This chart can make you a lot of money, man. Please hold, please hold, please hold, right? So I'm really hoping, you know, if we get somewhere here, then we can all take profits, sure. But let's hold a little bit more. About a week away, 2 weeks away from our entry points, right? And I really hope all of you kind of like entered there, right? So that's AUDNZD. I hope that makes sense. Just making notes. Please hold this. In terms of those, if you want to enter now, you know, there's really not much in terms of my strategy and safety and, you know, risk management. You are out of this chart right now, right? So sorry, but that's just how it is, right? AUDCAD, follow the war rooms, baby. Follow the war rooms. AUDCAD. Like I said, I saw this stuff on Friday, right? I want to see how this plays out. We're already in it. There's not much to do. I mean, if you want to take profits now, you kind of can, but you know, you're robbing yourself and you're teaching yourself a bad habit, right? And I know you're taking profits out of fear of losing the little that you've made so far, right? But markets haven't really shown us a good sign of making us a lot of money on this trade. Remember, we generally want a 1:3 type of situation from every single trade we take. Whether it's right or wrong, we really want to be generating a 1:3 mindset in that scale of probabilities. And so this particular chart has not really made, that much money. Just give me 2 seconds. Okay, so you're looking at this thing now at less than 1:1. It's not even 1:1 yet, right? Yes, on Friday, right, by this red candle, it was 1:1.5. And if that's how you trade, for every dollar you want to make $1.50, good for you. I'm a 1:3 type of trader, so I would break even on AUDCAD so that you don't lose unnecessarily. But I would also wait to see if I should take profits or if I'll break even. AUDJPY. Okay, same AUDCAD, AUDJPY. As long as we're in this trades right now, markets are almost coming to zero in state, broken even, or have like, just make sure your trades cover your swap fees, your holding overnight fees, all that kind of stuff. It's always very minimum, but make sure your good trades are covering those costs, right? Price arrived at the demand. Prices trying to assess the supply situation above. Euro AUD. Right, bearish engulfing pattern. There's not, guys, like I said, man, not much. There's not much for me to tell you. If you're with us, I think I lost money on this. I think this was Euro AUD. I'm pretty sure I got stopped out 3-4 weeks ago. Can't remember when now, but I do remember losing some money to Euro AUD. Because of that, I could be wrong, but I don't think I'm in this trade right now, right? But nonetheless, if you've missed the original entry, right, this is interesting. We have a very clear, marching type of direction from a governing perspective, which is price needs to drop, all right? Mayoral, all right, bearish engulfing on the mayoral time frame, weekly time frame, right? Inside a governing supply, yes, didn't make it all the way up there, but for now, we can assume the sell pressure is pushing price down. On the daily time frame, we can see a bearish engulfing pattern here. So yeah, if you are brave and this works out, let us know, right? So this is a good place to try for a trade. It's high risk. Just be very careful of that. So I'm gonna leave it red. Euro AUD, and by high risk, I just mean I'm not so sure how strong that supply is, right? So sometimes the supply is strong, I'm just not sure. Right, I just don't want you to get into a habit of saying you made money because I said, or you lost money because I said, right? You take some ownership for your own struggles here. Right, so this is interesting, but I do think this will be eventually broken. This is EURCAD, right? Broken to the upside as price looks for something better. But we shall see. That's EURCAD. Next chart is pound JPY. We saw what the Japanese index looks like, right? Breakout to the upside weekly. That did not engulf there, so I don't consider that a supply. For me, that is definitely not a supply. I'm going to remove the fib. There's so many things going on here on this chart, right? But I do think overall this thing wants to go up, right? Pound JPY wants to go up. So if I'm ever so lucky, excuse me, I would do that. All right, pound AUD is the second last chart. Sorry about that. Here, my mic just here. Pound AUD, my people, pound AUD prices. Okay, well, we close these buys, right? So let's see if we can assess. I don't want to touch it right now. I don't want to touch it right now. All right, cool. Weekly. On the weekly time frame, we've got a bearish engulfing failed formation, right? So it didn't engulf. So it's giving that, sell vibe, but it did not engulf. On the daily time frame, I'll do nothing on this chart, man. I'm not even looking to buy again. If I was, yeah, I'll do nothing for now. Pound AUD, I'm going to leave it alone for now. Gold, money covering gold because I know it's popular. All right. ourselves are being challenged, right? Look at the number of lows that prices try to create equal lows at. This is very interesting as the dollar is falling. Gold as that bearish engulfing pattern showed up on DXY. Gold created a bullish engulfing pattern, literally just jumping at the sight of slight weakness on the dollar. But for the most part, I don't see this playing out too long. If you look at the weekly time frame, we absolutely had to make contact with weekly supply. So we shall see if that holds. But if it doesn't hold, there's another weekly supply on the left, very close by. If it doesn't hold, there's another ultimate supply above this controlling chain price, right? But for the most part, for me, I'm looking at these sell assets, this gold, as a sell asset. I hope you enjoyed this. I hope you learned something. I appreciate you. 365. Don't forget to like, share, subscribe. Send this to someone else who you care about. Tell them I can help you and them master your wealth. Don't forget, and I'm still open to doing this. Doesn't matter where I am. As long as there's internet, and I will take care of my flights and accommodation. If you register yourself, or you can bring together 10 people to register, and you want me to physically come there, I will come to you, literally come to you. This is in South Africa. If you're outside South Africa and you get 20 people to register, I will come to you too, physically. We do about a week together in a venue, hotel, conference center, I don't care. We talk markets from about 9, the ones I've done in East London, it was 9 a.m. till 4 for a couple of days, which was really awesome, right? So it works. It's nice, man. Getting out, meeting people, and talking chats. If you're interested in this type of stuff, or you can head trader, as it's me, I think it's me, head trader at 365 Trading Academy, head trader at 365 Trading Academy, .co.za. Hit me up there and figure it out. I'd love to do at least 2 workshops in December. I'm looking forward to that. So let me know. Shake my hand. 3, 6, 5. Peace, guys. Thank you.